Okay, so here we are, early January 2024. Happy New Year to everyone. And as we get into it, it's freezing outside up here. We're outside of the Philadelphia area. But we're going to talk today a little bit about the Augusta strategy. The cold weather brought that to mind because we have a lot of our clients using their second homes in warmer climates. But just a quick pivot. Yesterday, believe it or not, the Senate and the House preliminarily agreed on a tax change. And they want to make the tax change retroactive, believe it or not, to 2022, and even for some portions of it, 2021. And guess when they want to make it effective? In the next 12 days, so that those rules can be incorporated into the 2023 tax returns. So just when you thought we were ready to go, there's going to be a delay. So yes, the IRS is going to say that they're ready to process returns, but ironically, I think what will happen is because a lot of it has to do with changes to the tax credit and some small business items, we're going to see that the tax season filings are going to be delayed so that the software vendors get a chance to do what they have to do and so that the IRS computers get a chance to change. Stay tuned. We'll come back to that. So again, here we are in the Philadelphia area up in the Northeast, chilly. It's actually cold all across the nation, right? And the Augusta strategy, what does that have to do with? It has to do with a golf tournament, ironically, is how it became in fashion. There's a golf tournament, as you may know, in the Masters every spring. April usually is held. And what folks do in the immediate area relative to the golf course, Augusta National, is it's been told that a lot of folks rent their homes out. And when they rent their homes, as long as they're renting it for 14 days or less, there's an opportunity, if done correctly, done with the correct documentation, compliance, following the rules and regulations, it allows them to rent their house for 14 days and not have to pay rent. Not have to pay tax on that rent. It's a pretty cool feature in the tax code. So anyone is allowed to rent a home that they own. It cannot be a rental property. We'll talk about that in a second. That's a technical detail, but it's a big one. But anyone's allowed to rent their home for 14 days and less and not have to pay taxes on that. Now, who do they rent it to? Well, in a lot of the cases at Augusta, they're renting it to corporate users, right? Who are housing clients there. A lot of times a golfer, who knows, maybe Tiger Woods or Scotty Scheffler or John Rahm, pick your favorite. A lot of those pro golfers will rent your home. I know back in the day in 2013 here in the Philadelphia area, it was rumored that the U.S. Open that happened at Marion, a lot of folks there, in particular Tiger Woods, supposedly rented a home there, very adjacent to the golf course. And he had his staff brought in, he had furniture brought in allegedly, and so on and so forth. Another rumor was last summer. Lionel Richie, you may have seen this if you're a golf fan, allegedly rented his home, again, on one of the holes at the Los Angeles Country Club, as well as many other people. And you know, some of those rents for the day, for the week, for the 10 days can be pretty significant. We hear that some of the numbers can be in the hundreds of thousands of dollars and sometimes even millions. So suppose you live up here in the Northeast or the Midwest, or you're in a cold weather climate and right now you're trying to escape to the Bahamas or to Florida or to Texas or to Southern California. And you have a home there and you're also a small business owner. Wouldn't it be nice if you could rent your home to a small business, perhaps even your small business, and capture that rent for a team building event, maybe a kickoff for 2024. Maybe you did it before the year end for the holiday season. And wouldn't it be nice if you could rent that to your business for the use for less than 14 days, have that retreat for your company, have that retreat for the members of your team, have that retreat for even yourself or spouse or other family members who are working in your company as key team members. Wouldn't it be nice if you can get that rental deduction for your business and at the same time, also not to have to pay rent? Pardon me, I said it again. Also not to have to pay taxes on that rental income. That's what the Augusta strategy is about. A couple fine points. Generally, it has to be 14 days or less. Generally, the home can't be a rental property to other third parties. For example, you have to be careful that it is not a pure rental property where you report it as a rental property. You have to understand that it is for the use of your home or your second home. Again, it is for a residence that you own. Now, some may say that you can do this for more than one property. We can get into the details of that if we set up a time to talk. Some may say you can do it for a rental property. I'm not quite sure that I agree with that one. But here's the key that I want to say. As we do over the coming months, these deep dives into these strategies, like the home office, like taking advantage of bonus depreciation, like the home office, like the research and development credit, and so on and so forth, I have to say that this is general information, right? It's general ideas to kind of whet your appetite, to give you an insight as to what's available when you work with us on an advisory basis. But you can't rely upon this in your specific instance. That would not be a good idea, right? We have to tailor the needs to your business, to your situation. So again, that's the qualifier here. Glad to share information generally with the public. Glad to let our users know what we're doing. Glad to know what an advisory situation may look like. But you also have to understand that this is not specific advice that you can rely upon until we get together and meet and optimize and plan and model for your business. So that's what we wanted to understand and we wanted to talk about today. We wanted to do a deep dive into Augusta, 14 days of rent, market value, right? We always have compliance. We use some tools to make sure that you adhere to compliance. Our tools will enable us to document what you're using the home, document who is there, show the number of days, create invoices, generate 1099s if necessary, and so on and so forth. So again, yes, we want to prepare your tax return. Yes, we want to help you file, but we are not just a prep and file firm. We are advisory, we are planning, we are modeling. And then because we've put some tax savings in your pocket, then we can go ahead and prepare and file your return according to the rules and regulations with all the proper documentation for compliance to make sure you're accounting for these expenses correctly, to make sure you're capturing them correctly, to make sure that you're recording the income correctly. But again, you know, in this day and age, we were just at an AI boot camp last week where we were 3 days deep diving into the use of AI in the world, not just in accounting, not just in finance. You know, who knows, someday a product like a Chat GPT or something else, Bard or whatever the next favor may be, Copilot, they may prepare your tax return for you automagically, if you will, with key inputs. But who's going to advise you? Who's going to provide the strategies that's going to educate you about taking advantage of these tax savings? That's the role that we really play now, and it's the role we want to play. So we're embracing AI. We're embracing technology because a lot of folks can fill out forms and tax returns, and it's important. It's compliance. A lot of folks can help with accounting on a day-to-day basis. It's compliance. It's important. You need good records. You need good books. You need to proactively look at cash coming in, cash going out, who do we owe, and who owes us, so that you can keep your finger on the pulse of your business for cash flow purposes. Also, remember, when we're planning, when we're advising, when we're saving taxes, when we're using something like the Augusta strategy, and we'll talk more as we go into the year about some of these other strategies, what we're really doing is reducing your tax liability. When we reduce your tax liability legally by being proactive, by being your trusted advisor, what we are really doing is improving your cash flow. Because for small business owners, you know that cash flow is king. You have to have a positive cash flow. You have to know. And wouldn't it be great if you had these deductions, captured expenses in your business, and at the same time were able to reduce your estimated tax payments? We just passed, today's the 17th, we just passed the last quarterly tax payment for 2023. And remember now, we're in a high interest rate environment. So whether you're at the federal level, New York, California, Hawaii, New Jersey, pick your poison. If you're not proactively paying your estimates as you go, you're accruing and incurring interest. And those interest rates are much, much higher than the interest rates that are being paid. I know a lot of folks are getting 4, 5, 6%, whatever that may be. But at the same time, the state, local governments, and the federal government are charging a much higher interest rate on underpayments of quarters. So we're getting a little bit ahead of ourselves because, again, we want to put tax savings into your pocket. And number one, what we want to do is provide strategies. We have workhorse strategies. And one of our workhorse strategies for small businesses is the Augusta strategy. Again, capturing that 14-day rent on a residence or a second home that you own and utilizing that in your business to reduce your tax bill. And how do we do that? We do that and educate you and hold you accountable by meeting with you quarterly and helping you to comply with the rules and regulations by creating, using our tools, a good documentation system to account for that type of a deduction. So just a quick example, again, a lot of folks may think that this is just an ultra strategy for the rich, but in reality, I found that folks that may even have a modest rent, the rent always has to match the fair market value. So if you go locally, what's the cost of a day to rent a conference room, to rent a facility for your business? $700, $800, $900 a day. So imagine if you had a small business and you could rent your home for that amount of money. So let's say that you collected $7,000, $8,000, $9,000 of rent tax-free. But let's also say that your small business gets a deduction now for that rent of $8,000. What's your tax rate? 20%? It's another $1,600. So there's a very simplistic example of potentially, but it has to be done correctly with backups, with comps and the like, of using this strategy in a small business to capture $8,000, $9,000, $10,000 of perhaps tax-free rent, and on top of that, another $1,500 of tax savings. So I hope that makes sense. Fair market value is a key too. You just can't have these elaborate strategies. The IRS has flags out there and they just won a recent case against someone who was deducting what was determined to be an exorbitant amount of rent. So yeah, the Augusta strategy, obviously, the brand name is for a very, very, very prominent event. But at the same time, the average small business owner can use it too. So I hope that helps. So we should get together. We should talk. You know how to reach out in our social medias here. You know where to find us. Tony Bruce, CPA, more than just an accountant. Take care and stay warm.